Hey there traders, thanks for joining me for this week's video review of the indices. Of course, we're here just to take a look at how the market's been acting, what are the key levels that we ought to keep on our radar in the trading week ahead of us so that we can understand what's going to influence how individual names move. Now, Happy New Year to each of you. Hope that your holidays were wonderful and you're ready for a fantastic 2014. If anything, it's likely to be a very interesting one, maybe a little bit more emotionally charged than last year, which really dealt with a very high level of complacency that we still have, and I'll touch on that momentarily. In fact, might as well just start off taking a quick look here at the VIX, which is the volatility index, better known as the fear index. And we see that, zooming out here, we're still just kind of bumping along these lows down here, really not far from this 12-13 range. In fact, closing last week at 1376 still shows a very high level of complacency. In fact, we've seen very few closes north of 20 here going back into the latter part of 2012. So for more than a year, we've only seen a handful of closes north of 20, and really by historical measures, anything north of the 30 to 40 range in the VIX is really what shows spikes in fear. So we're really down here near lows, and there's really just not much concern out there that stocks can go lower. However, it can often be a two-way street. So back to the indices here. Let's take a look here, starting off at the NASDAQ, which kind of exited this range here. And we had this 39 70 area that we broke out from, came back, tested it right there on that Fed day in mid-December, rallied sharply. We then broke out here for the NASDAQ and headed higher. So we rallied all the way up here into these year-end highs, 41.77. We've backed off a little bit, and at this point we've got a couple levels here. One is this unfilled gap right here, and that goes to the 41.04 level, so we're not too far from there. And then of course beneath that is going to be this prior high right here for the NASDAQ where it broke out, 40.81. So we've got a couple of levels here to the downside, as well as the most recent high up here, 41.77. Interesting to note that we just came off of 4 out of 5 sessions of declines here for the NASDAQ, but certainly haven't seen much downside associated with that. So we'll see how things pan out in a week ahead. Last week being a holiday shortened week with New Year's coming right in the middle of the week, you have to think that a lot of traders are still on vacation for those 2 days, kind of as an island, trading week. Thursday and Friday being isolated by holidays on both sides, or the weekend and a holiday. So I think that we'll get a better measure of volume and things like that in the next few days. But for now, the New Year is off to a little bit of a weak start. Definitely lots of room here for pulling in and seeing some profit taking if concerns start to rise. Moving on to the S&P 500. We've got the high up here at 1849. We've pulled back a little bit from there. Saw back-to-back declines Thursday and Friday. However, Friday's decline, very incremental, less than 1 point. So we've got this gap here for the S&P. It's a pretty small gap, but it goes down to about 1818, and then beneath that is this prior breakout area at 1813. So we've got a couple of nearby levels here to the downside, as well as the high right up here, 1849, that we need to be watching most closely in the next few days. Moving on to the Russell. We had the prior high right here at 1147, and then we also had a unfilled gap to 1146 and change. And then last week on Thursday, we saw a pullback right down to that 1147 area. We filled that gap, and then we saw a little bit of a bounce on Friday. Not a big one. We're still shy of the highs up here for the Russell, which are at 1167. But between this range here, 1147, 1167, we're pretty much smack dab right in the middle of that range at 1156 and change as of Friday's close. So this is the kind of the new range right now. It's about 20 points wide. We'll see how it develops if it continues to mature in the days ahead. And then finally is the Dow, which just went out on New Year's Eve with a brand new high at 16,588. It has pulled back a little bit from there, but certainly not much. It's down, just over 100 points from there, and that's thanks to Thursday's decline of 135 points. Now, beneath that, we've got a pretty good distance down here to this prior breakout area, which is the 16,174 level. So we've got some breathing room here, and certainly not far from the highs. Could be that the Dow is trying to carve out a little bit of a high-level base here. That's what we've seen so far. But so far, there's no real lasting momentum over the past several sessions. We'll see how things unfold. Now, if you're looking for some trade ideas to add to your own, stop by the site. We offer a free trial to my nightly service where I'm going over my detailed trading plan, showing you what I'm doing and why and where. So it's not something that's intended to replace your plan. It's intended to go right alongside it to give you some additional guidance and let you look over my shoulder and gain from my experience and my expertise in trading. So if you're new to the site, we offer a free trial. Otherwise, love to see you stop by, check things out. Thanks for stopping by, watching the video. Definitely hope that the week ahead is a great trading week for you. I will be back with more free goodies for you soon, but until then, trade like a bandit.